Commissioner Dobb,
Here.
Commissioner Clark-Holman, Commissioner Kniezek, Chair Basham.
Here.
You have a quorum present.
Item, please.
Chair's remarks.
I have none for this meeting.
C, approval of the May 11, 2022 meeting minutes.
Move for approval.
Can I get support? Supported by Commissioner Clee. Discussion? All those in favor?
Aye.
All those opposed? Ayes have it. Next item, Madam Clerk.
D, unfinished business. There is none listed. Item 1, under new business, communication from Marcella Cora, Wayne County Legislative Auditor General, forwarding a letter from Plant & Moran, PLLC, the county's independent external auditor, providing a required communication to the Commission, Committee on Audit, and the County Executive on the results of their audit on the county's September 30th, 2021 financial statements and related annual comprehensive financial report.
I'd like to welcome our Auditor General, Ms. Cora. You don't have to salute, and also her staff and her guests. And Ms. Cora, please proceed. Thank you.
Marcy Cora, Auditor General, and we'll be taking items number 1 and 2 together. I will have the representatives from Plant Moran introduce themselves, and then we have representatives from Management and Budget. They'll introduce themselves, and then I'll begin.
Want to introduce your guest or?
Sure. My name is Dave Helisek. I'm an audit partner with Plant Moran. With me this morning to my immediate left is Nikki Atcho. She's a manager with the firm. Tyler Luce, manager with the firm. Both of them helped oversee the financial statement audit portion of the audit. In the gallery, and will be joining us on their part of the presentation, are Amanda Ward. She's a partner with the firm, and Tara Sinowick, both who oversaw the single audit or federal compliance audit.
Or please proceed.
And we have the Chief Financial Officer. He'll introduce himself, and Graham.
Yes, I'm Huey Newsom, the Chief Financial Officer for Wayne County.
Graham Smithcourt, Director of Financial Reporting.
What is going to take place today? Plant Moran is going to go through their PowerPoint presentation. I believe I put a copy in each desk, and it will also be on the screen along with the AU260 letter. This is going to be the presentation where Plant Moran goes through all the findings, the results of the annual comprehensive financial report audit. And then at our next meeting on June 11th is where we will have the auditees responsible for each of the findings. They will come back and you'll be able to ask your questions specific to those findings. But this is more of the higher level results of the audit presentation by Plant Moran.
Mr. Newsom had a comment or question.
If I may, there's one other person from the management and budget team I wanted to make sure got introduced. Shantika.
Hello, this is Shantika Bullard, the Director of Grants Compliance and Contracts Management.
Welcome. Please.
Thank you.
I'll turn it over to Plant Moran.
Thank you, Auditor General Cora. Again, my name is Dave Helisek, and me and my team are happy to be able before you this morning to cover the results of the annual financial statement audit as well as single audit for the County of Wayne for the year ended September 30th of 2021. Even though we're presenting the results today, the audit itself actually started last fall. It's a process that requires a large amount of planning, not only from recurring type transactions, but also the implementation of new standards. As far as the audit itself, the audit was finalized, and I'll talk about that in a minute, in April. There was an extension needed. It was requested by the county. It was granted by Treasury. And with that extension, we were able to complete the audit, load it up to Treasury within that extended timeline. As Auditor General Cora mentioned, the majority of our presentation will be covering the graph package. I know that the committee has copies, electronic copies of the deliverables. We'll be going through part of those as it relates to the single audit findings, but as we go along, we invite anyone with any questions. Of course, through the chair, we'd be happy to address those as we go along. I could go to page 2, which I see is up. When we're talking about our deliverables, so the auditor's report letter on the ACFR was dated April 18th, 2022. So that's when we had received enough evidence and reviewed that evidence that we could say our audit was complete. And we were able to date our opinion at that point. The opinion was an unmodified opinion, which is the highest level of assurance that we can give a set of financial statements. What that means is these statements as presented fairly reflect the financial position of the county as of September 30th of 2021. And the change in that financial position are the revenues, the statement of cash flows, the expenditures, and the notes that were included within that document. Again, the highest level of assurance that we can give a set of financial statements. You'll also recall that there would have been 2 communications that came from Plant Moran during the audit related to the opinion, and it was an emphasis of matter paragraphs that were included. There was two items that required that communication. One was the GASB 84 implementation. So the county was required to implement a new standard. The county did so. We had to make sure as part of our opinion that we brought that forth to those charged with governments. Our opinion was not modified as a result of that implementation. There was also a communication related to a prior period adjustment, which we'll touch on later. In this presentation, again, a required communication when there is a prior period adjustment to those charged with governance. And as a result of this prior period adjustment, our opinion did not, again, need to be modified. We were still sitting on an unmodified opinion. Another one of our deliverables is the communication to those charged with governance, again, dated April 18th of 2022 in conjunction with the completion of the audit fieldwork. Tyler is going to walk through that as part of our presentation again this morning. We have our single audit report. So that is the audit related to the federal expenditures during the year ended September 30th of 2021. But the way it's set up, it also includes, excuse me, the reporting on any internal control matters, both from an ACFR or a financial statement standpoint, as well as a federal compliance or single audit standpoint. So Nikki, Tyler, and myself will be covering those findings related to the financial reporting. And then Amanda and Tara are going to jump in when we start to cover the federal program findings. As far as the single audit report is concerned, it's made up not only the findings, but we've got the schedule of expenditures of federal award. Again, this is the list of the programs that were not only tested and identified, but also the total program. So as part of the process for conducting a single audit that is not requiring 100% testing of all programs. There's a formula that we go through, and we do the selection based on those criteria. There's notes to the schedule of expenditures, much like there is for the ACFR, the financial statement audit, and then the schedule of findings and question cost, if any, which will again be a majority of our conversation. In addition to those two larger reports, there's 3 separately issued financial reports. The first is Wayne County Land Bank Corp. So we do a separate audit of the land bank. We offer a direct opinion on that. So it's essentially a separate audit. We were able to provide an unmodified opinion on that audit as well. And those statements were issued in conjunction with the financial statement for the county. In addition, we had 2 what we call in relation to opinions related to Wayne County Building Authority and the sewage disposal. So that's really taking the information that had already been audited as part of the larger audit and issuing a separate standalone statement for those 2 funds or authorities in this case. So with that, I'll move on to the next question or the next item. As far as our responsibilities, our concern. So again, we're conducting the audit in conjunction, in accordance, with generally accepted governmental auditing standards. Our responsibility is to express an opinion on the fairness of those financial statements. So it's just a reminder that these are actually the county's statements, with the exception of the audit opinion. They put that information together, we conduct our audit, and then provide an opinion based on our testing and that presentation. For us to form an opinion, we have to obtain sufficient competent evidential matter to provide a reasonable basis for forming an opinion. As a reminder, the audit is really required to gather enough information. We also need to take into account there's economic limits, there's a reasonable length of time that we need to conduct it in a reasonable cost. So we do sampling. It's not a 100% review of every transaction that the county conducted throughout the year. So it's a reasonable assurance, as the last bullet point indicates, but not absolute assurance. So with that, I'm going to, as far as the plan scope and timing, I'm going to turn it over to Tyler, and he's going to walk through that part of the package.
If we could go back one slide. Thank you. So as Dave mentioned, I'm going to take us through some of the general required end of audit communications. So while these are in slide format, they would be representative of the information included within the end of audit letter. Absolutely. Sorry, I'm short. So really the purpose of this communication is to close the loop in terms of scope, timing, and risk previously communicated in our pre-audit communication. So to start off with, we were able to complete the audit in accordance with the plan scope previously communicated, but as Dave mentioned, the timing was delayed, which I will discuss on a later slide. Next slide, please. In terms of new accounting standards, the county did implement GASB 84 in the current fiscal year. As a result of this new standard, there was a prior period adjustment for beginning net position for fiduciary activities, as the retirement system is no longer reported as a fiduciary activity of the county, and other activities were also moved in terms of classification and presentation. These changes, as Dave mentioned, are also highlighted in the emphasis of matter paragraph included within the audit report. Next slide, please. In terms of qualitative aspects of accounting in our audit, we did not note any transactions entered into the county that lacked authoritative guidance or consensus. In addition, there were no significant transactions in a different period than when the transactions occurred.
Question?
Thank you, Mr. Chair. And I'd like to go back to the last slide. Can you be a little more descriptive of this new GASB standard and what the fiduciary, what all of that means to us laymen?
Absolutely.
Lay people.
So essentially, GASB released a new accounting pronouncement, which deals directly with fiduciary activities and the amounts that would be reported within the county's financial statements. And as part of that, there were certain classifications and requirements in terms of what gets presented as fiduciary activities. And as a result of that activity for the retirement system, when you follow the GASB standards, that activity is no longer included within the county's financial statements.
I can add to that, Tyler. It also changed the presentation of that activity within the statements. So historically, under the formal, it really replaced the agency type funds, which normally is when you're holding cash or some sort of asset on behalf of a third party. It's just running through the county. In those instances, historically, the standard required that those be reported on a balance sheet only basis. So it would just be an asset and a liability. The standard also now requires that the activity run through this fiduciary or custodial type fund, much like the revenues or expenditures would roll through any of your governmental or business type funds as well. It also required that the county analyze what had historically been reported as agency type activity, which while maybe being held for on behalf of a third party, there was a term called own source revenue. And if this activity actually was a result, even if it was held for a third party, based on actions by the county, it required the financial staff to go back and analyze that and determine whether or not that activity, which has historically been recorded in an agency type fund, if it needed to be reported in a general or special revenue type fund. So it was a pretty big, I'd say it's a pretty large undertaking. I'm sure the M&B staff and the treasurer's office can surely attest to that. But it probably to everyone else, they may not have noticed, but it was a significant undertaking by the team.
Yeah, thank you, Mr. Chair. Some of that's kind of weedy. If I may, Mr. Chair, I'd like to ask the county, the commission fiscal advisor, Mr. Abbo, because one thing that caught my eye here was that the retirement system no longer reported as a fiduciary activity of Wayne County. What's the impact on our statements with that, Mr. Abbo?
The impact on the financial report, Commissioner? I'm not aware that there should be any financial impact on that. There are separately issued financial statements on the retirement system. Not only are they separately issued financial statements on the system itself, but an actuarial report that's done periodically to determine the liabilities associated with the retirement system. So I don't see any impact on that.
So is this a case of shuffling the cards but not changing the overall deck?
It's just changing the presentation.
Okay. All right. Thank you. Thank you, Mr. Chair.
Elsa?
If I could just add to that. So, as related to 84, as Mr. Abbo indicated, an audit is still done. It's not done by Moran. It's done by, an auditor hired by the retirement system. But the makeup of that governing body, no longer required that the retirement system be reported in the county audit. So that was, part of the makeup of 84. When you're doing the analysis on trust type activity, the makeup of the board now will dictate where that information is going to be reported, if at all, in governmental entities.
All set, Commissioner Flynn. Okay, please proceed.
So next on the management and judgments and accounting estimates. So as in previous years, we did identify the 4 estimates shown on this slide and evaluated these in terms of respect of the financial statements as a whole. So these are considered estimates in the fact that we are unable to agree to an invoice or a bank statement, and they do require the use of assumptions by the county. These estimates and methodologies all appeared reasonable in our testing of these. On the next slide, we have difficulties encountered in performing the audit. So we are required to inform those charged with governance of any serious difficulties in performing the audit, and that is highlighted on this slide. So due to delays of receiving the necessary information to perform our audit procedures, we were unable to meet the original timeline communicated. However, as Dave mentioned, we were able to issue our report within the extension period granted. On the next slide, we've got disagreements with management, and we're pleased to report that there were no disagreements with management that we were required to report. On the next slide, in the interest of time, I am going to save this content for when Dave and Nikki walk us through the audit findings, but this slide really summarizes the account type of adjustments required and also the highlights the past adjustments that were identified during the audit that were deemed immaterial individually and in the aggregate. On the next slide, we've got management representation, and this is just a reminder that we did receive a management representation letter. And finally, on the next slide, we've got, there were no consultations to our knowledge with other accountants. So with that, I will turn it over to Nikki to take us through the audit findings.
Before Nikki starts, this is just a reminder, this is really a recap of one of the deliverables that was included within your package. So I know we went through it, somewhat expeditiously. As it relates to the one thing I do want to make sure we highlight on the corrected and uncorrected misstatements, when we have a potential misstatement, we draft an entry, we submit it to M&B, we discuss. make sure we're all on the same page before we post it and then we move on. There will be instances where we identify differences as well that may not be significant in their omission or non-inclusion does not have a material impact on the statement. A lot of times that's just a timing difference between the year that it's reported. In those instances, when we turn it over, that's the conclusion that comes from M&B. And at that point, we make a conclusion on whether or not we agree that there's not a material impact on those statement, or I'm sorry, on the statement. So that's the difference between the corrected and uncorrected. We are in agreement with M&B's and the county's position that the omission or the uncorrected amounts do not have a material impact on what's presented, still able to issue an unmodified opinion on those statements.
Commissioner Kling.
Thank you, Mr. Chair. The PowerPoint follows the letter that we received from the auditors, the April 18th letter. And I'm taking a look at page 4 of that letter under results of the audit. And on the second and third bullet point, the final statement in each basically says management's responsible for reviewing the assumption, and that's on the OPEB liabilities. And then on the next bullet point, the defined benefit pension plan liabilities. If it's not the outside auditor's job, responsibility to assess whether the assumptions that are made are reasonable, I guess I would like to ask management, what kind of review of the assumptions and calculations are there for reasonableness? I guess I want some assurance that such a review is being done. So if you could, Mr. Newsome, I'd appreciate comment on that.
Mr. Chair, through you to Commissioner Kling. Yes, well, I will say this, that we in M&B will review those statements from the actuaries, both for OPEB and also for the pension. And we're aware of what that looks like, and we are actively making sure that we're comfortable with all the financials that are coming from there. So we do that on a regular basis, despite the fact of all the changes that have come around because of the new GASB pronouncement. So we in receipt of those, we review those, et cetera.
Yeah, because there was recent changes in the calculation of the OPEB liability. And the dollars there are enormous, in the hundreds of millions. And so when I look at the reasonableness of the assumptions, you don't have to be off by much to be off by a lot when you actually calculate the effect on something. So that's what I'm concerned about. So you're comfortable with the assumptions behind?
I'm definitely comfortable. I know that, we have, an auditor that goes through a very stringent audit process and an accountability framework that Mr. Helisek is, I'm sure, will be happy to walk you through. But I'm comfortable with those assumptions. Yes.
But I guess that was what I was looking for. We have other auditors looking at that. And report, and you get the results of that audit, or the retirement system does.
Go ahead, Commissioner.
I was going to say, Mr. Helsek, and then Mr. Abel.
Yeah, and I'd just like to add to that, because there's a direct impact of those reports to the county, which includes the reporting of a net OPEB liability and or a net pension liability. We do a high level analysis as well on certain assumptions. In particular, the discount rate or the investment rate of return that's being used, the mortality tables, and then when we see a significant or material adjustment That would also result in follow-up either directly by us or through the finance area, just to get further information from the actuary, just so that there's an understanding of what those, significant swings. So while Plant Moran or your auditor cannot be part of your internal control process, since there is an impact on the financial statement, we do take a high-level look at the assumptions that are included in those reports.
Abbo would like to comment.
Yes, thank you, Mr. Chairman. You know, as a former member of the Wickers board, I can tell you that the Wickers board really truly scrutinizes those assumptions, and it's based on guidance that they get from the actuaries. And the assumptions, they're in line with the amount of payroll growth that's anticipated, mortality, what the expected investment earnings may be, retirement ages. So those are all scrutinized on an annual basis. So I think that they, as Mr. Newsom had indicated, from me, I am very comfortable with the assumptions that we use, and I know that they go through regular scrutiny. A lot of times mortality tables are updated, investment type earnings. I know that in recent years, we lowered the assumption on earnings from 7.5% to 7.25%. Those are scrutinized very, very diligently by the Wickers board.
And I thank everybody for those answers too, but as we zip through a PowerPoint on, our annual financial reporting. And then as I read through it, there's a statement like, well, yeah, it's management's job to make sure those things are, those calculations are reasonable. So I just wanted to have a little deeper, a little more assurance about how those things are looked at to be able to determine the reasonableness of it. So I thank everyone for their answers. Thank you for the time, Mr. Chair.
Answer your questions, Mr. Clean.
So the next few slides discuss the 3 different classifications that are used when we have findings related to our audit procedures. And so a control deficiency is when the design or operation of a control isn't in place to prevent or detect misstatements on a timely basis. But there are mitigating controls or factors in place that would prevent a material misstatement. Moving on to the next slide. Yep. A significant deficiency in internal control is more severe than a control deficiency, but less severe than a material weakness. But it is important enough to bring to the attention of those charged with governance. And then the next slide. A material weakness exists when internal control deficiencies lead to a reasonable possibility that a material misstatement will not be prevented or detected timely. And so of the 14 financial statement and single audit findings that we're going to cover, 13 of those are categorized as material weaknesses and 1 is categorized as a significant deficiency. So Dave and I are going to walk through the findings that we did have. There were 10 financial statement audit findings this year. This is the same number as last year. Some of the facts and circumstances may have changed slightly, but 9 of the 10 are repeat findings, as is indicated in the report.
Or you had a comment or question?
I just wanted to indicate, once we start going through the findings, I did send the single audit to Sherelle, so she'll be able to bring up the findings on the screen.
Please proceed.
So the first finding.
So if we could bring up the single audit or the federal award supplemental information. I'm not sure if everyone has hard copies, but I'm with them, but so that we can follow along and everybody's looking at the same thing. If we could spend a second.
Hear you. Go ahead.
And we can wait a minute if anyone who has hard copies wants to get those in front of them as well.
We're going to start on page 14 of the, yep.
Just as a reminder before Nikki gets into finding number 1 on page 14, specific
Closer to you, Mike.
There's a specific criteria on how these are formatted out. You'll see criteria, condition, context, cause, effect, and then recommendation. Those items are all coming from Plant Moran. The views of responsible officials and plan corrective actions are populated by the county. So just when we're going through that, just a reminder that the last paragraph is really the response from the appropriate department who M&B had indicated would be responsible for that.
So the first finding is related to the fact that the general ledger and underlying accounting records were not reconciled and closed on a timely basis. So as a result, errors and adjustments were identified as part of the audit process. Many of the adjustments were posted and are reflected in the final financial statements, but there were also several adjustments identified that were not posted, as management deemed these to be immaterial to the financial statements overall, and we agreed. So the number of these past adjustments is pretty consistent with what we had identified in 2020. So the recommendation here is for departments to ensure that they have adequate resources for reconciling and recording activity throughout the year and then closing the books prior to the audit beginning.
Jump in before you continue.
Sure.
Mr. Newsom, do you have staffing issues or is there ways we can improve the system? I think you pushed the button the wrong way. Thank you.
Mr. Chair, we have staffing issues that are pretty consistent with pretty much every department in the county. One of the things we're working to do, the progress is a little slower than I'd like, but we're looking at is, making sure that we adjust salaries, within our budget, within our budgets, and make sure that we have, instead of having so many people, so many unfilled positions, is there ways for us to kind of reconfigure our staffing to make sure that we're able to get these things done on a timely basis. Now, I do have to remind everybody that, we were able to close the books and this didn't delay the audit itself. But, obviously we want to, we should be having periodic closes of, quarterly, if not semi-annually, but, preferably quarterly. Another thing I will say is that as we ramp up the ERP project, restart and ramp up the ERP project, this will help as well.
The reason I asked that is the question is because this actually gets back to commissioners' responsibilities and management's responsibilities. We used to have 18 auditors. We now have 7. We're supposed to audit the books every 2 years, our departments, and we can't do that. So when it comes to our responsibilities, when we start doing budget, just want to remind my colleagues that we have a responsibility on this too. But thank you. Please proceed.
The second finding is related to the lack of overall monitoring over the GL and financial reporting. And in a way, this is tied to the first finding. But the first finding is focused more on the result, the errors that we did identify. And this finding focuses more on the cause, which is the lack of monitoring controls in place throughout the entire year. The third finding is a material weakness and material non-compliance with laws and regulations with regards to 4 main observations. So the first is the county continues to have numerous checks that were never cashed by the recipient, excuse me, and are now several years old. So these are required to be escheated to the state. The second one is expenditures exceeded the budget for certain line items across various funds. The third is that the original budget for one non-major fund, the County Corrections Fund, would have resulted in a deficit, which is not permissible under the Budget Act. And then the fourth item is there was no budget approved for the Building Authority Special Revenue Fund. So our recommendation here is that the county create a process to identify and monitor the applicable compliance requirements. I'm going to turn it over to Dave to address the next finding.
Thanks, Nikki. And if I can just add something to the last finding, the items that Nikki had mentioned related to Public Act 2 of 1968, in addition to loading up the financial statement to Treasury, we're also required to provide a checklist on that asks, probably about 15 to 20 specific questions. One of them does relate to Public Act 2 of 1968 and whether or not there was any inconsistencies with what that act says versus some of the policies that were enacted or actually followed. So the county could expect just a question on a couple of these items and some follow-up and some additional corrective action directly to Michigan Department of Treasury related to a couple of these items. Again, the recurring type of items, maybe not for the exact same reason, but the communication would probably be similar to what the county has received in the past. I'll go on to number 4. And this relates to the bank recs and the timely preparation. And I know this is a repeat finding, and it's really one that is important for a number of reasons. Obviously, it's cash, and cash is king, and it's important. But it's really important to have a procedure in place to ensure that these reconciliations are happening on a timely basis. Why it's important is, well, if there's an error, an irregularity, a discrepancy, the ability to identify that sooner rather than later, obviously is important. At one point, the reconciliations, which is really a two-prong reconciliation with the Treasurer's Office and M&B, at one point was upwards of 8 months behind. So by the time we were able to issue our opinion, September 30th of 2021 was obviously complete. I couldn't speak to exactly where that process is post September 30, but it really is important to complete these on a timely basis, not only to ensure that the any interim financial information is accurate, but to timely follow up on any unidentifiable or reconciling type items that don't really jump out as a normal process of the reconciliation. So again, that's a repeat finding and one that the county should continue to work towards as a more timely review of those. I'm sorry, a more timely preparation and review of reconciliations.
Moving on, finding 5 is related to inmate property cash and focuses on 2 main issues. The first item is that based on review of the outstanding checks included with the bank reconciliations, these cumulatively have been increasing every year and go back about 15 years. So we recommend that the county review these outstanding checks to ensure that the listings are accurate and that old outstanding checks are sheeted to the state. The second item that we noted during our testing is that a reconciliation between the jail management system and the cash balances is not performed. And so we recommend that a reconciliation be performed monthly to ensure that proper balances are maintained.
Dave, could you or Nikki explain the impact of this? Because this is actually the money that belongs to the inmates that are being held in the jail. And if all the inmates were, which we know wouldn't happen, leave at one time, would we have enough cash in the bank?
Right, that's precisely the issue. If you were to look at the amount of checks that are outstanding as of year end, plus the amount of balances for each inmate per the jail management system, that balance in total, there wouldn't be enough cash in the bank to cover those balances. Like Marcy said, if every inmate were to be released, they wouldn't be able to cover those liabilities.
Much like one of,
Sorry, Commissioner Dobb had a question or comment?
Thank you, Mr. Chair. Has any progress been made on this, this issue? I don't know if there's anyone here to speak on this, if Mr. Newsome knows anything about this, or has anyone started working on this? I know we've been talking about this issue for a couple of years now.
Hit the button the wrong way again.
I think if I hit it and hold it, it makes it worse. A lesson learned. Through you, Mr. Chair, through Commissioner Dobb, Unfortunately, the management budget has some peripheral involvement in this process, but it's mostly the treasurer's office and the sheriff's office. And so I can tell you that there have been, some conversations that have happened around making sure that these reconciliations happen on a timely manner. But unfortunately, that's all I can provide. And I don't think anybody's here from the sheriff's office or from the treasurer's office.
Thank
Sorry.
you.
Our next meeting, I think Ms. Cora has a
Yes, I
comment
was going
about
to say,
that.
at the next meeting, we will have representatives from the sheriff's office so we can go through it with them at that time.
Please proceed.
Thank you. We'll move on to finding number 6. This again is a repeat finding, as the committee may recall. One of the sewer systems was turned over to the downriver communities a number of years ago. However, there was some debt tied to that system related to a judgment levy. So while the asset is gone, the debt still resides with the county. And there's a requirement to still collect from those local units that are part of that system to continue to pay down this debt service. So while the activity and the cash is receipted into the 303 fund, that's the fund that houses this activity, we did meet with the right folks within the department, and as far as how it was being reported out, as far as revenue recognition from those receipts, the correct outstanding liability, and there were adjustments needed to materially to correctly state that fund in a material respect. So this has been a repeat finding actually for a couple of years now, and I think we spend a little bit more time even with the folks to ideally ensure that there's a better understanding at year end when this fund is kind of closed up and wrapped up, that those final closing entries are completed and will be reported without the need for adjustments for the 2022 year end. As it relates to finding number 7, the county should have in place a process to reconcile the year-end undistributed property taxes to other authorities. So not only does the county receipt property taxes from local units of government, the property taxes are actually passed through the local units of government and send up to the county for the reporting and the recording of that information, but the county also receipts money for other entities like RESA, SET, the community college, which it receives from the local units and then redistributes those to those entities. At the end of the year, there was an ask for support for the undistributed property tax liability. So that gets distributed approximately every 15 days from the monies that are collected. It took a while to get that reconciliation. Again, the September 30th year end, we probably received the final reconciliation the end of March and the first part of April. It took a while to get that information. It took a lot of effort. There is a heavy reliance on the existing PTA system where these transactions are reported and recorded. But at a point in time, it took, a long time to get support for what that outstanding balance was. In the end, we got, I'll say close enough. We were materially close. There's still some follow-up being done by the treasurer's office for the remaining outstanding liability to just document who those monies are owed to and ensuring that they're getting distributed appropriately. As it related to that reconciliation, the numbers were significant. It was just a matter of identifying monies that had already, properly been distributed for the most part. So it's more of a process to, to really try to, on a periodic basis, is look at the liability that's recorded in this fund, and then looking at the underlying support to ensure it's consistent and supportable.
To that point, if I can jump in for a second, it seems like we have this every year, and could you comment on that, Mr. Abbo?
I'm sorry, Commissioner, comment in what regard? I mean,
The process with the treasurer's office relative to delinquent tax revolving funds, those sorts of things, if we can clean up this process.
As to process, perhaps CFO Newman can better discuss that, the interrelationship between reconciling those accounts between the general fund and the treasurer. I have a comment that I'd like to make regarding the fund balance of the delinquent tax revolving fund, but I'll do that at a later point in time.
Mr. Chair, it's been it's been frustrating, I would say. We've worked with the treasurer's office. I think part of it is a staffing issue. Part of it is also a systems issue. I think, I think Mr. Helisek mentioned ResIQ and SimPro. We did, one of the success stories of the original ERP project was the fact that we implemented SimPro at the treasurer's office before we started with Oracle. And of course, we all know what happened with Oracle. So that SimPro implementation in theory was successful. And so we as M&B are downstream from this process. And so we make ourselves available to work with the treasurer as much as we can. In this particular audit, I spent a lot of cycles. My colleague here, Mr. Graham Smith-Court, who's the new director of financial reporting, has spent a lot of time on this, as well as Mr. Yogesh Kasani, who is the deputy CFO. I'm at a loss of words. Whatever we need to do to make this better, we're willing to do. And happy to have, we have been having and happy to continue having, continuing engagement with the treasurer's office on how we fix it. But, this is very important for the county, right? Particularly because obviously with the new pronouncement, I don't know if it's this one or there's another finding coming. There's quite a bit of money here, and we did finish the audit, but I think Mr. Helisek did mention the fact that, we finished it because we are within a certain level of materiality, threshold materiality here. So there's still some work to do to figure out what is happening with this undistributed property tax fund. So, but my office, continues to prioritize this effort. Thank you.
Cora?
Yeah, too, and Mr. Helisek mentioned how long it took to get through the process, trying to get the support, because I think our initial amount was around $100 million that we had to find the support for. So at least we got that number down to a minimal value, but it was a lot of money to try and figure out where it actually went.
Well, please proceed.
If I move on to finding 8, this finding is related to the previous finding. So, of what we just said, and which was, as Auditor General Cora had indicated, was, originally just trying to identify where the $100 million reconciliation lied. It was determined by Treasury in their analysis that $25.7 million that was sitting in this fund was actually due to various county funds from previous years. So that information was shared with M&B, and at that point it was concluded that there needed to be a prior period adjustment, which is one of the items I discussed earlier. Between the 3 funds that were identified, it was roughly, again, $25.7 million that was sitting in this agency fund that needed to really be reported from previous years' revenue in these three funds. I think that this, adjustment really supports the need or the suggestion to ensure a reconciliation is done on a timely basis. That, in any case where, there could be, something wrong or some sort of adjustment that needs to be made in the system itself, that it's identified in an early stage and can be corrected and adjusted in a shorter period of time than was identified in this instance.
Cora?
And I could add too, at one of the prior meetings where we did have the treasurer up here, they were in agreement to come to the committee and audit round quarterly to tell us the progress they are on to their reconciliation. So I think it'd be good if we follow through with that. But we can talk more about that when we have them here at the next meeting.
So again, 7 and 8 are really related, same impact. 8 needed to be separately brought forth because this is the one that related to a prior period adjustment to the county financial statement. Moving on to number 9. So here we're moving on from, the collection of monies on behalf of the county and the other maybe collection units to a finding related to the delinquent tax receivable fund. So as a reminder, the delinquent tax receivable funds actually is when the county basically issues debt. Local units of government turn over their real property taxes to the county. The county then essentially buys those receivables, and anything that ultimately isn't collected is charged back. So there's a point in time over a 2+ year process where the county is collecting on behalf of these local units for real property taxes. So they, the treasurer's office will keep a listing and keep up to date on those collections. One of our processes is to ensure that the underlying support is agreeing to the general ledger. So you can see as part of this finding, there is a requirement of an adjustment to the general ledger of about $500,000 related to this receivable. So the underlying documents, the underlying support was not equaling the general ledger. When we had gotten into it, we had identified in a couple instances where these payments that come in, there's a principal component and an interest component because they're late. And in a couple instances, the principal was recorded as interest and the interest was recorded in principal, and it required an adjustment to bring that in line to the supporting detail. So again, it kind of goes back to the need to timely reconcile these significant amounts and identify them as quickly as possible. So any adjustments that are needed are done on a somewhat timely basis. And then finally, the last item, the 10th item, again, a reconciliation discussion as it relates to the cash receipts fund. So there's the cash receipts fund is really kind of a clearing account for certain activity. Might run through payables, might be return checks, but it operates much like an agency fund where you've got cash and you've got these liabilities out there. The numbers started to creep up a little bit. We had inquired about support for these. In a number of instances, really what got brought to our attention is balances where we thought would be debit balances actually had credit balances, and again reinforced the need to timely do reconciliations within these funds as well. An adjustment was required that ended up being identified by the treasurer's office for $9.7 million, which ended up being posted and incorporated within the statements. But again, even in this instance, while the numbers were not as large as what I had previously talked about, there was not a complete reconciliation in this fund. And much like the 703 fund, there's additional work that needs to be done to nail down those final reconciliations.
Comments, questions? Mr. Abel?
Well, I know that we've gone through a lot of process issues related to the audit. And I know that at the next meeting of the audit committee, they're going to be talking to representatives of many of the departments. But aside from the issues that have occurred at the treasurer's office, there's a matter that I think that should be part of the discussion as well. I was looking at the comprehensive financial report. And one of the things that really jumps out at you on page 45 is the amount of fund balance that's accumulating on our delinquent tax revolving fund. Hear me out when I talk. I'm going to work through some numbers. Right now, there's a fund balance of $155 million. Last year, there was a surplus.
Can you repeat that?
There was a fund balance of $155 million.
And
At September 30th, 2021, delinquent tax revolving fund.
Mr. Newsom, would that help you with the general fund?
Absolutely. Yes, sir. I'd be more than happy to have some of that transfer.
Are you saying, you gentlemen saying that we need a process?
Well, what I'm saying is that I believe we need a formula-driven determination of surplus and what needs to be transferred over to the general fund. And here's the reason why. I know that we issue debt for to pay the delinquent taxes that are owed to our local communities. And for that, in order to keep a reasonable interest rate, we allow a pledge. Generally, that debt is about $180 million and it's outstanding for 2 years. A pledge of 15% gives you a reserve requirement of about $54 million. I mean, if you add $20 million for working capital, that takes it to about $74 million. Now, they've got $155 million in the account, and they are not expecting to transfer any money to the general fund this year. There's no budgeted transfer anticipated this year. So if the surplus is the same as last year, it means that at September 30th, 2022, the delinquent tax revolving fund should have approximately $200 million.
I'm sorry, could you repeat that? It wasn't clear.
Yes. Yes, if the surplus is similar to 2021 at the end of 2022, without a transfer to the general fund, the delinquent tax revolving fund should have a surplus of approximately $200 million. Just rough numbers suggest that that surplus or that fund balance needs to be somewhere below $100 million. I believe that $100 million could be transferred to the general fund. And the reason it's so important is we're going into budget hearing soon. And one of the themes last year was the inability of the county to attract and retain employees. Having those resources in the general fund and used appropriately could help resolve some of those issues. And having a surplus, a formula-driven determination of surplus and something that is not just necessarily arbitrary by the treasurer could force some of the reconciliation issues that have been a problem in the audit, some of the audit issues that we've been discussing recently. So how that is accomplished, I would defer to our commission counsel to give us some guidance on that. But I believe that should be part of the discussion when the representatives of the departments come back to audit at the next meeting.
And before we go to Commission Counsel, I know she wasn't just pointing up, but Commissioner Dobb had a comment or question. Thank you.
Thank you, Mr. Chair. Mr. Abel, thank you for bringing that to our attention. And for those of us who may not be really fluent in accounting speak, can you explain what the delinquent tax revolving fund really is? Like, where does the money come from?
Well,
explain it to me like I'm 5.
Okay.
Regular speak.
Simply put, each of the local communities within Wayne County collect taxes through, I believe it's March 1st. At March 1st, they accumulate all of the unpaid taxes and they effectively sell them to the county. The county issues debt to get resources and the county uses the proceeds of that debt to basically buy those receivables from the local jurisdictions. So after March 1st, if somebody wanted to pay their taxes, they are delinquent and they need to be paid by the county. So what the county does is in the collection, they collect the taxes and they collect the delinquency fee and they collect interest. The delinquency fee and the interest along with the principal, the unpaid taxes, is used to pay back the debt. And through that process, it usually ends up a surplus. So the accumulation of fees and interest last year amounted to a $46 million surplus. And at certain points in time, the treasurer determines that it truly is a surplus in their accounts and transfers the money over to the general fund. But there's no formula for that. It's just, to me, it's just more subjective than it really needs to be. And I think that transferring the money to the general fund needs to be something that's more reliable and consistent so that the resources could be used for the purposes of running Wayne County.
So is there a minimum balance that we're required to keep in the delinquent tax revolving fund?
There really isn't. It's just what prudent management would require. And so what I was suggesting is, in order to get a good interest rate on the bond issues, we usually pledge additional collateral. And lately that pledge has been about 15% of the amount of debt issued. So that's why I was saying we usually have 2 years outstanding of about $180 million of debt. A pledge of 15% gets you to about $54 million. And I would suggest some amount of working capital for the treasurer's office, maybe 20 million or something that's justifiable. But that only gets you to about $76 million. And like I said, at the end of this year, at the end of 2021, there's $155 million in fund balance. At the end of next year, without a transfer to the general fund, there will be approximately $200 million. And to me, that's excessive.
And then one final question, who manages the delinquent tax revolving fund?
The treasurer.
Okay, that's all. Thank you,
Thank you.
Mr. Abel. Thank you, Mr. Chair.
And the commissioner that has a resolution of this is Commissioner Knizik.
I don't know about that. So just a couple thank yous first, and then I think a question kind of similar to what Mr. Abbo was saying, but just for my edification. So first, thanks to Mr. Newsom and his team for this and their work in this space, to Ms. Cora, Mr. Abbo, their teams, to the folks from Plant Moran. Appreciate you graduating high school and joining us here today. Thank you. I know that audits can feel tough or like fingers are being pointed and all that other good stuff, but I see this as really valuable conversations because, if we're committed to being responsible stewards of the taxpayer dollars and making continuous process improvement, I think it's a great conversation to have. And I appreciate the commission's approach to recognizing our role in the solution to this, something that you pointed out, Mr. Chair. What's unclear to me, though, is what we do to keep in our back pocket, what is needed to rectify the problems or the solutions. So I'm putting on my full-time job hat here. When we get audited, we get called before the legislature, we get smoked, and then we put together a plan of, here were the audit findings, here are the things that we need to remediate that, and then we keep it in our back pocket or provide it to the legislature when we're going through our budget negotiations. So when we at the county have these audits, what do we do? And maybe this is for Mr. Newsom, maybe it's for others. What do we do on the back end to say, thank you, Plant Moran, for these findings. If we want to rectify these findings, here's how many FTEs it would cost. Here's how many dollars it would take, so that we can have those either through the administration or the commission going into the budget negotiations to make sure that we have hard and fast numbers to try and solve the problems, as opposed to just, a bit of a more, non-specific, we should do something about it.
That's why we have commission counsel. And Felicia, could you make a couple of comments about process or lack of?
Through the chair, I think the question on the floor from Commissioner Knizik may be more appropriate for Marcy or for our CFO. But with regards to the question Mr. Abbo posed to me, So 10 years or so ago, I asked the very same question, which is who determines the surplus? Under the statute, the law says that this body, the county commission, transfers any surplus to the general fund. So you have that authority to transfer surpluses. But what the statute doesn't do is tell you how that surplus is calculated. Though the statute does specifically tell you the type of items that can be paid from the statute. So there has been a running question, I'll say, and I know specifically in Wayne County when I raised this issue several years ago regarding who makes that determination. When I researched, again, there was nothing in the law that specifically said the treasurer does it, though we do understand practically because the treasurer maintains the DTRF, the treasurer actually does expend money from that. So some involvement from the treasurer is absolutely necessary. Whether that sole involvement is questionable. I don't know, because it's been probably 10 years or so since I've done any research, if there has been any case law, anything to clarify that, but that is definitely something that we can look at. And I can work with our fiscal staff and our CFO and M&B staff and treasurer's office and see if we can come to some resolution and solution to that question. Because I know, like I said, when we looked at it 10 years ago, it was an outstanding question that hadn't been resolved in the state at that point.
Thank you. Ms. Cora, could you
And
weigh in
to
on this?
Commissioner Knizik's, at the next meeting, this is when we would plan on bringing all the oddities that are responsible for the findings. And this is where we can ask them their questions. What do they believe they need to help rectify the situation to get the reconciliations done? And we need them to be able to tell us, you know, how many FTEs you think you need? Do you have enough staff? Do you not have enough staff? Is system issues? If they can tell us what their issues, and then maybe the commission can take that to the budget hearings and help alleviate the problems. But also, I think, as I mentioned earlier too, I think if we do have the treasurer come back on a quarterly basis, because these reconciliations are so important, because we don't want to have next year's audit what we had this year's audit. So if we can have the treasurer come quarterly, tell us what progress he's made on his reconciliations. Is he getting them done within 45 days, a month end, or are we still out 3-4 months? That will help us, but at least we'll know where we're at and not wait till September 30th to find out where we're at.
Follow.
Does that answer your question?
Yeah, just a quick thought, if you don't mind. So I want to make sure that I understand it, that we could ask these things, right? And like when they come in, you know, quantify this in some way, shape or form. But as of today, there's no actual formal mechanism beyond us as commissioners or perhaps our audit staff saying, provide this to us or making that request to them. I'm just trying to say, figure out whose responsibility is it to make that ask and to hold the different areas accountable to be able to provide that information.
I think, when Felicia can correct me if I'm wrong, but I think the committee could take that responsibility to ask the auditors what they need to do to be able to provide the corrective action. And I know when the auditors come in next year, they will follow up on each of these findings that are in here now, but we don't want to wait till next March to find out we still have repeat findings again. I think we need to take a more proactive approach from the committee level, and maybe it's just take all the findings and maybe with each of the findings on a quarterly basis, where are you standing to address your recommendations and what will it take? Maybe do it that way.
Perfect answer. Thanks, Marcy.
And Commissioner Kling?
Thank you, Mr. Chair. Commissioner Knizik, I think you're exactly right on point. And as we've discussed, it gets a little weedier at our next meeting as we get more into the details of these. And I encourage you to continue with that line that you are going down. Because in the end, we all want, you know, at a higher level here, and this is my comment here for today, at a higher level, there's been a lot of consternation about our bond rating, right? We've barely got our nose above junk bond status. And then the discussion of, well, the audit's going to be late. How is that going to affect things? And Mr. Abbo just discussed issuing debt, you know, for the delinquent tax revolving fund, which will have a lot to do with bond ratings. So at a higher level, Mr. Abbo, I want to ask you, when whoever they are in anonymous skyscrapers in New York that come out with the ratings of bonds that everybody follows so closely, they will scrutinize our audit. and the audit's going to say that it's an unmodified audit. But I don't think Moody's and those folks stop there, go, oh, it's an unmodified audit. Great, great, bond ratings go up. And when I look at these findings, the findings kind of lift the lid on the internal machinery, how things are going on a day-to-day basis. How much are the findings scrutinized by the bond rating agencies as they try to assess really the financial situation of the county? Are the findings scrutinized closely by those folks?
Commissioner, I believe that they are. And I'll be honest with you, every organization has problems. Every organization has problems. The issue is, how do you deal with them? So that's why I think that what we're doing now is so important. How do we deal with this? I know that we were delayed in issuing the audit beyond March 31st. It was actually issued April 18th. That's good that it didn't go too much further than that. And the reality is, we do have stronger fund balances, and we do have controls in effect. It just points to the notion that we need to improve those. And so a lot of it is going to be how we react to it, because the rating agencies do interviews with management of Wayne County when we're ready to issue bonds. They talk to us. They look at our financial statements. They look at the demographics of Wayne County and Michigan to determine what that rating should be. So as part of that process, we can talk to them about what we've been doing. So we can mitigate it a lot, but they will ask the questions.
Well, and that's, it's from sitting in my chair, I don't know how much 3 weeks late getting it to the state really is going to affect New York and that, I don't really have that kind of context. But I think your important point that you're making there is it's not only the findings, it's how you deal with it. And I think Commissioner Kniezek was getting at that in his comments. And Mr. Chair, I believe, wasn't that many years ago in our annual audit when we had the findings, it wasn't being reported to us what were repeat findings and what weren't. If I think back over the history of being on this committee, I think at one point in the audit reports, they said repeat findings, and then that kind of fell off for a couple of years. And I asked that those be put back on. But to get to the points we're all making here, I think, and the urgency there is in what you're discussing is how we deal with these findings. Would it be possible, because many of these are multi-year findings, they're not just repeat findings. You say repeat findings, that gives you the impression that maybe it was just last year. Can we get how many of these, an aging, if I may say, of these findings? How many are 3, 4, maybe even 5-year findings? Because I think that may help focus the work that we do as a commission on the ones that really need the attention. Would that be possible, Mr. Chair?
I certainly hope so. I've got a list of folks that would like to comment here.
This is to that point.
To that point, Ms. Cora.
I have already prepared a schedule that's going to list all the fines and will tell what years they go back to as far as being repeat fines. If it's 5 years, it's got like 2019, 20. So that schedule is already prepared. We'll have that for the next meeting. It will also, I'm going to work with Mr. Newsome, and we're going to have the direct responsible parties. Right now, we have M&B as responsible parties, but we know it's not M&B that's responsible for all these findings. We're going to have the direct auditees that will be responsible along with the condition and the recommendation. So you'll have that for your next meeting.
And I appreciate that. And given the discussion here, which I think has been very good today, I will also need some guidance from the commission fiscal advisor. Which are the ones that need to be attacked first? Which are the ones that have the biggest impact? Which are the ones that put us most at risk? And so we can almost go about it that way too. And with all of this discussion, I want to say to Mr. Newsome and his team, I am fully aware of the situation you're in. And I can't imagine how many resources have to go to the ERP project, a project that I am fully in support of and is long overdue. And the cost of that, I'm not too concerned about. I'm more concerned about getting the job done. But with all of these things floating around, I certainly appreciate your diligence and your stewardship since you've been here. But we all have the responsibility of making the difficult financial decisions to keep this boat afloat. And I think the more that we're honest with each other between all of the parties here, I think that greatly increases our chances that we're going to do a good job in the long run for the citizens of Wayne County. So I don't want my remarks to be like some sort of reflection or some sort of a criticism of MMB. But I look forward to getting that report from you at our next meeting, Auditor General Corp. Thank you, Mr. Chair.
Before I introduce our key commissioner, Mr. Newsom, do you agree with the comments made by our fiscal advisor, Mr. Abbo?
Mr. Chair, there are two things that he said that I do want to kind of sound off on. Number one, I didn't get a chance to sound off on Mr. Abbo's analysis of the DTRF. I do support that. Sitting, obviously budget rolls into under the CFO, and it is difficult for us to to budget and maintain some sort of a fiscal window of what we're going to have year over year with the variability in that transfer over to the general fund. It is frustrating. So we know how much GFGP we're going to have to work with. So I wanted to, take this opportunity to kind of reiterate the importance of what Mr. Abbo said as it relates to the DTRF and transparency there. Now, when it comes to the rating agencies, I think the important thing for you all to understand, we work with the rating agencies. Mr. Abbo has been in my chair. He's worked with them, and he also has visibility to that relationship and involvement in that relationship as a fiscal director for commission. And I wanted to reiterate what he was saying with the rating agencies as well. They look at a number of different things, but Commissioner Killeen, you are exactly right. You'd be surprised at how thoroughly they comb through these financial statements, these findings, the audit opinion, et cetera. And so, yes, Mr. Abbo was talking about the level of thoroughness that they go through. That's exactly right. And just real quickly before I give up the microphone, Commissioner Killeen, trust me when I say, and I appreciate your sentiment, but I think at this point people know how serious I am about not just putting bodies in seats, but somehow getting this ERP across the finish line. I'm not going to use the fact that we haven't been successful on the ERP as an excuse for the findings that are directly attributable to my department. I have to be held accountable to the ERP, but it is important for us to not just fill heads, but also give those people the tools necessary so they can properly account for the county's funds. But it is incredibly important to me, my team, the county executive as well. So, and we will be hopefully giving you yet another report. I don't know if it's going to go through GovOps or Cal or what on the status of the ERP as we get ready to award a new implementation contract, or at least recommend for you all to approve an implementer contract. So thank you, Mr. Chair.
Thank you. Commissioner Coleman.
Thank you, Mr. Chair. I've been here 12 years, and there's been this dispute between the county and the commission and the treasurer's office about this income tax revolving fund. There's been this same argument, not only with the current treasurer, but the former treasurer. There's been this dispute about who determines and how much money is transferred and when it's transferred and all that sort of thing. So this is nothing new. It just appears to me that at some point there ought to be something in statute or a regulation or something that would make that determination clear, because we're going to be going over this same issue if I'm here 12 more years, for 12 more years, about who has control and who has the authority to determine how much money is transferred and how much money is not. So I don't know why we're beating this horse. We've been beating it for, I know, 12 years, and I'm sure for much longer than when I started. So I'm just, that's how I'm weighing in.
So you're saying we need a process?
There ought to be a process. Of course, there should be a
Thank you.
process.
Further, you all set? Okay, anything else?
We have the single audit to go through.
Pardon me?
The single
four-
audit findings we're going to go through.
4
There's-
findings we want to briefly cover
Sure.
on this as it relates to the single audit.
Good morning. Just once again, I am Amanda Ward and I serve as the audit partner in charge of the single audit. And with me is Tara Senewick. And we're going to walk through the results of the single audit for the September 30, 21 audit. What I want to do is just take an opportunity to provide a few highlights before Tara gets into those audit findings related to the single audit. So
Can I just make a comment first?
Oh, yes, ma'am.
Commissioner, you do know that we only have 8 minutes before my other committee starts?
Yes, ma'am.
Thank you.
during the audit, the county spent about approximately $150 million on federal funds. And as a result of that, we had 7 major programs. So we audited 7 different programs this year. And I'm pleased to report that we rendered unmodified opinions on all 7 major programs. And Tara will discuss the 4 findings that we had. 2 would have been related to CDBG. One of those is a repeat finding, and then there were 2 related to CRF. So what I'm going to do is just turn it over to Tara to walk through those findings.
Thanks, Amanda. Finding number 11 is, as Amanda indicated, our only repeat finding. So in terms of the requirement, any grant recipient receiving and administering public housing assistance in excess of $200,000, and the county certainly received above that threshold, is required to submit an annual performance report to HUD, also referred to as the Section 3 summary report. The county did not submit the required performance report for the program year ended June 30, 2021. And our recommendation here is simply to implement some sort of tracking mechanism to ensure that that reporting is done on an annual basis as required by HUD. With that, I'll move to finding number 12, also related to CDBG. So projects funded with CDBG dollars are required to have an environmental review unless specifically identified by HUD as exempt activity from this requirement. So the county was unable to provide the necessary documentation to support that an environmental review was performed on 5 of the 18 projects that we tested. So here again, we're recommending simply a tracking mechanism for those projects that are not exempt and it essentially would need an environmental review in order to ensure that they're not only performing environmental reviews, but also that they are documented and that documentation is retained appropriately as required by HUD. Findings 13 and 14 relate to the Coronavirus Relief Fund. So starting with number 13, the U.S. Treasury laid out specific criteria to ensure that charges to the fund would be allowable. One requirement is that costs must be incurred during the period of availability, which began March 1st, 2020 and ended December 31st, 2021. During our testing, we identified 3 out of 65 transactions that were incurred outside of this prescribed period of availability. And the sum total of those was approximately 138,000, forgive me. In addition, the U.S. Treasury outlines specific activities deemed allowable under the program. And one of the 3 transactions that fell outside the period of availability was also for ineligible activity. And this was according to the Treasury guidance. In addition, the county employed a method of accumulating gross payroll costs to be charged to the grant, then utilized a reduction factor as an allowance of conservatism. Because of this reduction factor, we were unable to determine whether the 3 transactions were improperly included or properly excluded from the expenditures reported on the schedule of expenditures of federal awards. So our recommendation here is that the county specifically identify costs included and or excluded on the schedule based on Treasury's guidance. Our 14th and final finding, again, also relates to the CRF fund. Direct recipients are required to provide financial reporting to the U.S. Treasury on a quarterly basis. One of 4 reports that we tested was overstated by $6 million due to the following. Subsequent to submitting the report, the county removed the $6 million of charges from the program. However, controls were not adequate to correct future reports to the funding agency. We recommend that the county correct the amount reported to the U.S. Treasury during the closeout process, as this program has since ended. Our last finding.
Okay, anything further from Commissioner Kniesen?
Be quick. For the expenditures that occurred outside of the guidelines for CRF or outside of the spending window, what is the remediation for those payments that were made?
So what I will say there is, in the views of the responsible officials, there is a statement by management to indicate that they disagree with the findings. Because they have this reduction factor, they argue that there's enough allowable cost in the population that there should not be any like recoupment of costs that will be done by Treasury. Our concern is related to the controls and to verify that that reduction factor was in fact adequate.
There is nothing else be submitted from this committee. So at this point, I'd like to open the board for public comments. Is there anybody from the public that would like to comment?
Here.
Yes, Commissioner.
Before that, I'd like to move to pass this item for the day.
Can I get a motion to, it's been moved. Can I get support to pass this item for the day? Been moved and supported. Any further discussion? All those in favor?
Aye.
All those opposed? The ayes have it. And I'm sorry, next, there's nothing else in front of this committee, so public comments? Anybody from the public would like to comment? Last time, anybody from the public would like to comment? Okay, next item, Madam Clerk.
Adjournment.
Can I get a motion? It's been moved, supported. And any discussion? All those in favor? All those opposed? Ayes have it.